The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Well, stock of the day is Platinum Asset Management because the company confirmed this morning it's received a takeover proposal out of the blue from specialist alternative investment manager Regal Partners. Now, the non-binding indicative proposal from Regal would see Platinum shareholders receive 0.274 Regal shares for every Platinum share that they own. Platinum will also pay shareholders a 24-cent dividend from its cash reserves if the deal goes ahead. The proposal subject to a number of conditions, including the granting of due diligence, a look under the hood, which can often bring these sorts of approaches undone. But the market likes it in terms of a Platinum share price up 12% this morning on the news. Regal Partners up 0.3% on the share market. Scott Phillips, of course, Platinum was the rock star fund manager of the 90s, was it? Kerr Nielsen defected from Bankers Trust. BT, which was the golden fund manager at the time, started Platinum, and it really took off. It was sort of the Magellan of the 90s, wasn't it?
It really was, mate. Yeah, probably maybe the first real rock star fund manager. I don't mean that derisively, but probably the first time I think many people in the financial and broader business world kind of knew the names of these fund managers. You know, there's been the Buffetts and the Lynches in the US, but Kerr Nielsen, as you say, kind of the first cab off the rank to get really wide acclaim. And then, as you say, followed by Magellan, both of which have fallen on relatively hard times more recently. Not necessarily terrible for Platinum, but not particularly great either. I always find these fund takeovers fascinating, Koshy, because what are you really buying when you take over a fund manager? You're kind of buying the people, you're buying the funds, but both those can leave at a moment's notice. You think about, if you buy a business with real assets, at least you've got those left over. This time around, I guess Regal's looking for scale, they're looking for mass, maybe they're seeing an undervalued opportunity. But we've seen with Magellan and with Platinum, the fact that funds can come and go really at a moment's notice makes it a very interesting decision to try and use shareholders' funds to go and buy a fund manager rather than attracting those funds across, or simply taking the staff, right? As you say, Henderson himself came from Bankers Trust. Nothing stopping anyone from Platinum going to work for somewhere else and maybe taking the reputation, if not directly the funds with them. So I've got to say, I find this one really, really interesting. For Platinum shareholders, look, this is a 14-odd times earnings business. It's been reasonably disappointing over the longer period. I guess not so much all the way back to the 90s, as you say, mate, but the last 5 or 10 years have been reasonably ordinary for Platinum shareholders. End of the day, would you take the money or don't you? I guess you probably do. This does seem like something of an end game for Platinum. Whether it does survive this one or not will probably come down to either another bidder or simply saying no and hoping that they can make their own way. As I said, I'd rather be the seller than the buyer. If I was Platinum, I'd probably take the money.
Okay, take the money and run. What do you reckon, Mark?
Well, I agree with everything that's been said. And if you look at Magellan as an example of recent fund managers, Hamish Douglas was a rock star, as Scott said, but their funds under management went from 130 billion down to 30 billion. So they lost 100 billion. So that proves the argument that the money can be very hot, even though it normally isn't. It's usually quite sticky. Now, the thing with Platinum, I think their funds have been very sticky, particularly the last decade, considering how bad their performance has been. Now, I looked at the 10-year returns, just take 10 years from today. What's the return? You put $10,000 into Platinum, and hello, you've got $9,400. So you're negative 2% average per year.
Wow.
And if you look at it, what that comes down to is an average capital loss of 16.5% per year, plus a 10.47% per year dividend, which is a plus. You net that out, you've actually got less money than you started with 10 years ago. And if you put the money into the S&P 200, you've literally doubled your money. You've actually got slightly over 20. You'd have 20,000 for your 10,000.
So and fund managers are meant to do better than market, aren't they?
But they've done nothing. You haven't even kept up with inflation.
So
and then I just had a quick look at Regal, and they're even worse.
Oh.
Yes. So I don't understand why they would want to buy it. But anyway, look, it's I would take the money now.
Right.
Well, on this 12% lift and say thank you.
And not wait for the takeover and go into Regal, just take the cash.
You can speculate on all that, but I wouldn't want to have Regal shares.
Right. Right.
If you look at Platinum going forward, we're showing their forward return negative 15% a year, and Regal we're showing negative 41.
Right.
You know, in other words, they're both shocking.
Right.
Regal's more shocking.
Right. All right. All right. That's pretty clear. So from both Mark and Scott, if you're a Platinum shareholder, sell into the spike now, up 12% today, rather than wait potentially if there is a takeover come through. Remember, they've got to go through all the due diligence. It's better to take the cash than actually switch into Regal shares. So Platinum Asset Management, that's our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.